All right, it is time for that stock market weekly update. What happened this week? Well, we're looking at the 5-day chart here, the Dow Jones. We'll get into that in just a second. Today's plan here, the little docket we have listed out, we're going to talk about the indices, we're going to get into my portfolios, and then we're going to talk about news for the rest of this time. So, exciting stuff. So we start off with the Dow Jones here on the 5-day. Very interesting week, right? Up, down, all around. Let's go down to Crazy Town because this market has lost its mind. There's so much volatility, it is crazy. But still on the week up 2.2 in terms of the Dow. Year to date only down 15%. 15%! We're talking about major recessions possible. Likely, major recession likely due to this lack of business for the next, 2 quarters of the year. Half the year is going to be pretty much wiped out. Year to date, down 15% only. Wowie. S&P 500, what do they have for me? Well, it's a little similar story. Up 3% on the 5-day. Year to date, down only 11%. Up 24% this month, nearly 25%. Fudge in the last 30 days. NASDAQ, what do we have? Well, what a shocker. More gain on the NASDAQ, actually. 6% up. 6% up, guys. What can I say? Nearly 26% on the month. Year to date, the NASDAQ is only down 3.5%. Now, a lot of these NASDAQ companies are tech stocks. Yeah, it's fair to say. Companies that won't necessarily get as awfully impacted by recession-type environments. But that doesn't matter. It's half the year. It's hurt. EPS is going to be hurt too. And down only 3.59 for year to date. 1 year out, they're actually up 8.1%. Holy crap. It's wild. This scares me only slightly. The way I see the future going here, as far as the market's concerned, obviously we priced in negative movement very quickly, and people obviously quickly responded saying, we don't like that. I think the stock market is either going to have another downward move of around 10-15% once earnings come out next week or the week following, or we're going to have a stagnant market where we only see 1 to 2% gains for the next 2 years potentially. Well, in all honesty, I'd rather have us drop down so I can put I got a bunch of money sitting on the sideline just waiting. So we'll see how it is. Get into my portfolios now. First, we have the M1 portfolio. No real changes here. We upped the Disney percentage to 5% now, so we're looking at an uptick in buys. Main Street, Capital, I lowered that to a 2% number. Facebook and Apple, I upped to 10% instead of 9%. And my dividend amount, too, I lowered from 39% to 35%. So I lost four ticks on that because I think there's going to be a lot more money to be had in some of these tech stocks than there is in these dividend ones for the time being, because a lot of them are suspending dividend anyway, so might as well build up some big positions elsewhere, right? That's what I'm saying. So overall, money-weighted return 13.39% down on this guy. Not too exciting, but if you look at the actual, market-weighted, I'm down $750 or $720, down 7.7%. I don't like that, but could be a lot worse. We have some key positions here, and we have a lot of stinker of positions, and a lot of the stinkers of positions are, that's right, the ones that are in my what I would call this dividends portfolio, this dividends pie. So all those are pretty much stinkers. These real estate type companies too, they got hammered hard. So as far as the Robinhood portfolio is concerned, on the week we're up only a measly 0.4%. Can you believe it? But all time, we are now back up into the green. Back up into the green, baby. 3.8% up, $500 up. All time. I love to see that. I mean, we needed that because look at this freaking dip here. This is massive. As far as any sort of positions added, nothing major actually with this. I didn't add anything this week in terms of that. I added 200 onto my M1 portfolio. The only differences you'll see as we scroll down, we've got some lovely additions known as, that's right, I got some partial shares of O, Realty Income, due to a dividend being paid, and Iron Mountain, also due to a dividend being paid. We also saw ARI, Apollo Realty. Guess what? Dividend being paid almost got me a full share, 0.99 of a share. It was close. It was a $8 dividend I got, and guess what? The shares were like right at $8, set at 4 cents at open. So I got 0.99 share, and then we also see 0.03 of a share for super dividend fund here. It's an ETF, so nothing too exciting in terms of additions there. So yeah, don't be too excited, but I'm okay with it. We take those. Very good to see this portfolio doing positive again, but I still would like to add more. As far as news is concerned, we see that stocks scored the first back-to-back weekly gain since February. That's right. They're enthusiastically greeting plans for some states to begin the process of reopening, and we will get into that. Most CFOs, that's right, most CFOs see the economy returning to normal next year. About half of CFOs expect a V-shaped recovery. Holy crap. Return to normal economic activity in quarter 3. So they're expecting normal activity in the third quarter. I frankly think I'm in line with these people. I know there's a lot of people saying that this is going to change the way that we see life forever, and I understand why people say that, and I really don't think that is even fair for many reasons. For one, I think we don't have the data to know anything about this still. I think we still don't really know what's going on. I don't know how many people have it. We don't know, what that infection or death rate looks like. We don't know that right now. Because right now it looks worse than it, honestly, it looks a lot worse than it is. There are studies that show that, as many as, 4 to 5 times as many people have it that are asymptomatic than those who actually have symptoms. So that would mean, therefore, the rate of, that's right, death would decrease significantly. And obviously the overall numbers of what we're looking at for total at the end of this is going to be a lot less than we originally thought. So I don't know. I think people are going to be a lot more willing to forget about this and return to normal life than a lot of, the news media is trying to tell you. Could be wrong on that, but that's why I kind of agree with this V-shaped recovery in terms of revenue and profit going right back up. People are going to be willing to return, back to their spending habits, back to work. It's what people want to do. Quarantine life is sucking for people, okay? They want to go back to normal life. That's just how it is. 40% expect a U-shaped recovery, a little bit slower, leading into 2021. So that means 90% of CFOs are expecting normal recovery by 2021, at least, minimum, which, again, I think is 100% accurate. I don't think there's going to be really that many ramifications into 2021. The only thing I think that could maybe see ramifications, cruise lines, maybe. But overall, I think most companies are going to be doing great. So, yep, one-fifth of the executive were shutting down or idling some operations. 49% indicated their firms were scaling back or delaying investments. But, yeah, nothing crazy going on here. So, we also see from JP Morgan's earnings that big banks are hoarding cash right now. They have a lot of cash left over. They're raising debt just to make sure that they get all the way through this and they have money to loan out, stuff like that. So they have debt for days. But overall, they're going to do perfectly fine in the end. We have Apple unveiling, that's right, the SE is back. The new SE listing for $399, 40% less than an iPhone 11 right now. That's crazy. Yeah, iPhone 11 or iPhone SE was massive when it came out originally, but we'll see. Budget iPhones, are people into it? I don't know. Starbucks, you see, eyes opening. Kevin Johnson told employees in a memo that the coffee chain is preparing to reopen some cafes in the U.S. That's right. Some cafes will continue drive-through only. As we expect, or as we experience in China, we are now transitioning to a new phase that can be best described as monitor and adapt, meaning that they would probably limit the number of people that go inside, stuff like that. But that's exciting stuff. We're getting back to normal. We are getting there slowly but surely. And I told you by June, we're going to be living normal life again. Just going to tell you that right now. We're not talking about mass gatherings, but as far as you being able to go out, go to the park, go see your friends, it's going to be normal in that aspect. Maybe you can't go to a baseball game for another month and a half after that, but we don't know what that looks like yet. I'm excited to see, but still, things are going to be normal in terms of everything opening up at least by June, no doubt. Sorry, media, it's not going to be September like you want to tell me. But Gillette was up massively because guess what? Positive news in terms of the remdesivir study. A positive with rapid recoveries in fever and respiratory symptoms observed when almost all patients discharged in less than a week. That's right. Major news for this remdesivir drug for them. Obviously, it's already been approved for some treatment on emergency cases. Could be more widely treated. And once we get these drugs that are widely produced that we have access to, people can honestly worry about life normally. And once we get antibody tests, we'll be back to normal too. Come on now, guys. There's a lot of good things going on that should be all sorted out within a month's time. So I'm excited to see what happens. Boeing is resuming commercial plane production. They're a garbage company, but they are resuming commercial plane production. Next week, woohoo, guess what? You know what that means tomorrow. That's right. They're resuming freaking work, which means, that's right, employees coming back to work. We're starting it already. I love to see it. So the U.S. economy is reopening in phases. There's several phases. And again, this is a state-by-state basis, which I kind of hate because you have some governors that are, frankly, taking the situation a little too fierce. Michigan is completely destroying everything they have right now. Governors going a little bit crazy. There are some that are just losing their minds. So, and you're seeing protests right now because of this, and it's valid. We're at a state where it's really the world's, biggest superpower right next to China. But we need to be open. We can't just be staying shut down forever. And the plan is to open up quicker than, was originally expected. And we need to do that. And I think we are at the point where we can do that starting May. But there are some governors that are extending things to mid-May and beyond. And then you get people like Michigan who are, they're completely destroying everything and saying we're shutting down every single business. Holy crap. It's just crazy stuff going on right now. But it is a state-by-state basis, and obviously the federal's working very well with the states, trying to figure out plans for each state because every state's unique. We're not opening all at once, but one careful step at a time. Instead of a blanket shutdown, we will focus on healthy Americans returning to work. U.S. plans to reopen, focusing on sheltering the most at-risk individuals and establish clear benchmarks on testing. So we're getting to a point where what's going to happen is, and if you look at studies, let's just be frankly honest, if you're a healthy individual under the age of 40, you are not at risk, really. You really aren't at any risk. Those people are going to start coming back into normal life. They might quarantine those over the age 50 who have, or those who have health conditions. Those people might still be stuck in quarantine, which again you might say is, it's not fair, but it needs to happen. And I think it's going to be what happens. Those people are going to have an eye kept on them because they're the ones that are at risk because of this. I don't know what it's going to look like. I really don't, but we're going to see within the next couple weeks what this looks like. As many as 29 states could open up relatively quickly, literally tomorrow in some instances, as the president said. This is exciting stuff. I don't know what's going to happen as far as each state. Obviously, Michigan's going crazy. New York's probably going to be a little bit longer, but what sucks is New York City is really where you see this issue at. But everyone in New York suffers from it now. They all have to suffer from it because New York City is so densely populated. Crazy stuff. We have, that's right, China GDP down 6.8%. The first quarterly decline since at least 1992. The drop was worse than the 6.5 consensus, and it's frankly what we expected. Business activity in China has returned to roughly 83% of capacity, from 70% a month ago. So it's coming back. Everything's coming back for China slowly but surely, if their numbers are accurate, which I don't believe it. No deal on small business loans. That's right. The president and Republicans wanted to add another $250 billion to the small business loan program, in which they've already spent the first $350 billion on, so that's already been sent out the window. And it got held up by Senate Democrats because they wanted to include cash for hospitals, state and local governments, and food assistance. And on top of that, they also had a minority clause in there where more money would go to minority businesses, women-run businesses, stuff like that. And what a shocker, because of that, it got declined. It's just kind of upsetting to me that we've got businesses that really are on the brink that could use this money, and we're focused on the semantics of it instead of just passing it and then worrying about semantics later. I mean, at this point, come on now. We got small businesses that are hurting bad. And if we also are not going to be wanting to reopen the economy, some governors aren't, we need this money for small businesses. Just how it is. But I don't know. Payroll protection. But we can't if we're not giving the money out. Procter & Gamble had a massive quarter, as we expected, because their products are the ones that high in demand right now. The paper products, they're massive. Organic sales in the healthcare segment were up 9%. So Procter & Gamble, one of the most boring stocks, is actually one of the best stocks right now. Can you believe it? Stocks are higher. You saw this on Friday. Stocks were excited because of the news that we could be reopening the economy, and because of Gillette's study, in which we might find a good source of what could cause this economy to reopen is if we have a good drug that can treat this. And if they can treat it and limit death significantly, then we're in. Yeah, exciting stuff. And then finally, Royal Caribbean Cruises has suspended sailings of global fleet through June 11th. Will it go much past then? Potentially. Again, what I think is cruises are going to be the ones mostly hit by this and other mass gatherings. So you're talking about sporting events, concerts. Those are going to be hit relatively hard, but I think everything, as far as even cruises, by mid-July to late July, for sure, we'll see everything return to where it's back to normal. There might be some restrictions, but I think overall, these companies will be starting again. So you're going to see more short-term pain for Royal Caribbean Cruises and all their cruise stocks. But I think we have better things coming to us than we originally thought. So just stay positive out there. We got this.